Time now for business. Let's say hello to Cole Stangler.
Hey, Francois.
We begin in China, where they're cracking down on cryptocurrencies.
Yeah, that's right. Over the weekend, officials in Sichuan province called on power companies to stop supplying electricity to all cryptocurrency mines there. The move comes after the closure of more than 24 such mines in the region last week. Also follows in the footsteps of the Inner Mongolia region, which took similar measures earlier this year. Meanwhile, China's central bank said it's met with lenders to ensure they're enforcing an existing ban on handling crypto trades. That's been in place since 2013, but the scrutiny today is much greater in a country responsible for more than half of all Bitcoin production worldwide. Thomas Waterhouse takes a closer look.
At midnight local time on Sunday, the plug was pulled in Sichuan. The power supply to all of the energy-guzzling crypto mines in the Chinese province was cut. That development came after 26 mines were ordered to close in the southwestern pocket on Friday. Authorities also ordered local governments to conduct a dragnet-style investigation to locate and shut mines, with the Global Times newspaper reporting that last week's closures have resulted in the shutting down of over 90% of the country's Bitcoin mining capacity. The move comes after China's State Council revealed last month that it would be tightening the screws on the whole industry. And this Monday, the central bank announced that it had recently convened a meeting with other financial institutions, including the payment platform Alipay, and had urged them to get tougher to enforce the government's ban.
Speculative trading in virtual currencies roils economic and financial order, spawns the risk of criminal activity such as illegal asset transfers and money laundering, and endangers people's wealth.
As well as the financial risks linked to cryptocurrency, this broadened crackdown has also been triggered by environmental concerns, with crypto mining expected to use 0.6% of the world's total electricity production this year. The crackdown also paves the way for China to bring in its own digital currency, allowing the central government to better monitor transactions. Tests of that currency began back in March.
Now, cryptocurrencies have taken a tumble thanks to that clampdown in China. Bitcoin falling to a 2-week low earlier in the day, now trading at around $32,000, well below its April peak of more than $65,000. So you can see those heavy losses there. Let's turn now to the major European markets. Seeing some gains to kick off the week. Shares on the CAC 40 here in Paris up around 0.5%. Gains too across the board, London, Frankfurt, and Milan. Wall Street also with some solid gains to start. Investors hoping for a rebound after last week's news that the Federal Reserve moving towards a hike in interest rates. You can see those Wall Street numbers there with some pretty hefty gains across the board there. Now, meanwhile, European Central Bank Chief Christine Lagarde spoke to a commission in EU Parliament this afternoon. She underlined how the pandemic continues to weigh on the economy, saying now is not the time to move towards a hike in interest rates. As to why, she noted Europe's recovery is in a different phase from the United States.
The United States and Europe are clearly at in a different situation. They're in a different situation in terms of the cycle. They're in a different situation in terms of inflation, and they're in a different situation in terms of inflation expectations.
The Kantar Group has unveiled its annual list of the world's most 100 valuable brands. Amazon, Apple, and Google took home the top 3 in that order, and American firms dominated the rankings, making up around 3/4 of the list. Meanwhile, corporations based in China maintained a slight leg up on their European counterparts, with Tencent and Alibaba cracking the top 10. Tech firms and companies based online were at the top of the list. Here in France, the government has announced that nightclubs will soon be allowed to reopen. After 15 straight months of being closed, they're set to open their doors again on July 9th, but there are some strings attached. Attendees will have to present a new state-run health pass showing they're fully vaccinated, have tested negative, or have already contracted COVID. Clearly a good day for those in the business and for fans of nightlife more generally. Though, Francois, the crisis has not been without consequence. According to an industry trade group, more than 100 nightclubs in France have had to close permanently due to the COVID crisis.
I heard one nightclub owner on the radio this morning saying that he fully expects that people are going to want to party and make up for it. So
I think so, I understand.
I'm counting on you to investigate that claim. Many thanks. Cole Stangler there with more business news later on. It's